Staying with Nvidia now, earnings obviously front and center next week. The latest checkup on the strength of the AI trade. For more on what to expect and what the current landscape actually looks like right now, let's bring in Firstmark Capital founder and partner Rick Heitzmann. Welcome back.
Hey,
it's good to see you. So let's just think about Nvidia for a minute. I mean, in general, what do you think is on the line next week for the AI trade?
Well, it's really, are people continuing to spend on CapEx? And we're seeing not only the hyperscalers, but also companies in the private market continuing to bet big on the long term on AI and therefore continue to buy chips from Nvidia.
So we heard within the last 24 hours from Jensen Huang, CEO, who addressed the fallout from DeepSeek, suggesting that the market got it wrong, that all it shows you is that you're going to need way more compute, not less. Some of the other hyperscaler CEOs spoke of, similar needs following that really big upset that we witnessed in the market, and I'm sure you watched it as closely as everybody else. Is that how you see it too?
I don't see it exactly the same way.
Where's the nuance then?
I see that there are going to be open source and closed source data sets, and they're going to need different amounts of compute to be able to work together. But, all the big models are going to need a massive amount of compute. So maybe the hyperscalers will have some closed models, even OpenAI having closed models. But some of the open source models will be used by more of the startup ecosystem and people who need to be more capital efficient.
Did you come away from that story thinking that it was less bullish for an Nvidia, or at least even to some incremental degree? Did you come away thinking that?
A little bit, but not really, because what you're seeing is that there's still this fundamental demand from AI. The important thing is DeepSeek immediately rocketed to #1 on the App Store, which means there's still fundamental consumer demand for whatever AI products out there. And as much as you could track, fundamental demand equals demand for NVIDIA chips, and therefore that demand will remain for the near term.
You mentioned the amount of money that the hyperscalers are spending. I mean, it's extraordinary, right? How long does the market accept that?
They have to accept it for the rest of 25, both on an offensive and defensive perspective. No one's going to announce on their earnings, oh, we're going to spend less because we believe less in AI. That's not going to be a 25 story. It's, hey, we have to be offensive and defensive. We're at least halfway across this lake. We're beginning to see with things like Agentforce, the AI is working, it's driving ROI, and we need to continue to double down on this hand.
As a VC who's backed some what are now really big companies that were once just startups, did you come away at least from the DeepSeek story thinking in any way, you're now going to be able to do a whole lot more with a whole lot less? I'm talking about money and how that impacts the kind of companies you want to invest in and the dollars you want to put.
I think it was exciting from that perspective that, there's more open source models. You'll be able to do them in different ways, and they'll be much more, to your point, capital efficient than what we would have guessed 6 months ago. So you're not going to need, I came away less bullish on OpenAI. I did. It was closed models who are claiming you have to spend tens of billions of dollars to have these models work. And what DeepSeek proved, and they spent more money than they probably would have let on, is that if you have an open source model and you have a data set, you could build smaller applications much more cheaply, which is awesome for the startup.
So then you were theoretically more bullish on Meta.
More bullish on Meta.
Well, because Meta that day, if you recall, was the only stock in the group that was up. And it just finished this week a 20-day win streak.
Yeah, and because they're open sourced, they want people to build on top of them. They want to be part of that model ecosystem as opposed to being closed and having everybody just work within their parameters. So open in the long term generally wins. And therefore, it's benefiting Meta in the short and medium term.
Probably the biggest theme of this week is uncertainty, right? I mean, everybody's thinking about it. I'm sure you are. Companies that want to go public are. Where are the IPOs and when are they coming?
It's going to be longer than we would have guessed. I would have thought they would be starting to come in a month or two. I think uncertainty is the worst thing for IPOs. Uncertainty on inflation, which affects interest rates, uncertainty of what are the rules of the road and where are we going, and just general lack of confidence in the investor marketplace. In January, IPO anticipation was at a 3-year high. If you look at the Jefferies report, the buyers had more buying demand than what you'd have guessed in years, the highest they ever had. That's my guess is, although the next quarter is not out, that's waned significantly, both in terms of inflation concerns as well as just overall market volatility.